Hello and welcome everybody to today's Commodities Corner presented by the Gold and Silver Club. So during today's session, we will be covering live market analysis. We will be going through a watch list of trading opportunities, a forecast of where we expect gold, silver and oil to be heading next. And of course, we'll be answering questions and providing live support. As always, any questions, any contributions during the session, please do put those into the chat function and we will go through those as we continue to analyze the market. So before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We're regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, the energies and the agriculture markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times and the Wall Street Journal. And of course, it's a pleasure to be here on binary.com as well. For further information on the Gold and Silver Club and our expertise, please feel free to visit our website, which is www.thegoldensilverclub.com. Okay, good. So before we get into it, guys, before we go through the charts, we talk you through the latest developments in the markets. We'll just quickly take a bird's eye view of the market and just talk you through current year-to-date performance. So just to give you an idea, the best performing markets so far this year have been palladium, which is up over 19%, the Nasdaq, which is currently up over 14%, breaking out to all-time highs again this week. Euro stocks up over 9%. Gold is currently up 9.5%. The DAX is up 8.4%. Silver is up just under 8%. The S&P 500 is up 6.9%. The Dow Jones is up 6%. So overall, those are the best performing markets at the moment. Markets which have seen more of a decline over 2017 have included sugar, which broke down this week, down over 19% so far this year. Natural gas, which is down 19%. We've got volatility index, which is down 18%. Cocoa, which broke down to 8-year lows again this week, which is currently down over 12%. And oil, which is down. WTI crude oil, also known as US oil, is down over 11%. And Brent crude oil is down over 10%. So just to give you a bit of an idea of the big trends which we've seen so far in 2017. Now, we've certainly seen a lot of activity over the course of this week off the back of the Open on Sunday, where we had the first round of the French elections, which essentially saw Emmanuel Macron win the first round. And overall, he's ahead in the polls at the moment. So that certainly did calm the markets to a certain extent. They got excited, certainly, of the prospect of Emmanuel Macron winning the elections. We've seen over this week a gap higher on a lot of equities, which included the Nasdaq, the S&P 500, the Dow Jones, and they've continued actually to follow through throughout most of this week as well. We've seen a surge in equity prices, and we also had a lot of anticipation on Donald Trump's announcement on Wednesday on tax reforms in America as well, which helped to stimulate upside in the equities markets. Now, at the moment, we've also at quite an interesting point with regard to gold and oil as well, which I'll talk you through very shortly. Gold is at a very key zone. Oil, after breaking down yesterday below $50 per barrel, has managed to snap back very quickly, get back above the 200-day moving average. I'll cover oil in detail with you because I do see a good opportunity there. We've also just had the GDP numbers come out, which was within the last 5 minutes, which have been stronger than expected. So the US dollar is currently rallying, quite a strong surge actually on the US dollar. And as a result, gold and silver are selling off quite fast. In fact, there are some great trading opportunities right now, actually. So I'll move over to the charts very shortly. So just to give you an idea, GDP numbers just came in. Gold is tanking, silver is tanking. We've got Brent crude oil and US oil, which are breaking out at the moment, and the US dollar is rallying at this point in time. So we'll have a look at that on the chart very shortly. Just to give you a quick overview of major trading opportunities coming up now as we go into May. So today is the last trading day of April. As we go into May, we've got the French elections, which is going to be occurring next weekend. So potentially a very big, well, I expect that to be a big market mover. Those of you who stayed up to trade the US, excuse me, not the US, the first round of the French elections on Sunday, will have noted the big moves that we saw. So we saw over a 200-point gap on the open for Euro US dollar. We saw the S&P 500, the Dow Jones all gap up. Gold gap down to 1,200 and 65 US dollars per ounce, so it gapped down over 150 points on the open, and we definitely expect a lot of volatility off the back of the Sunday, the 7th of May French elections, the second round results. Now, as we go into next week, there's a lot happening as well. So next Wednesday, we've got the FOMC statement, which will cause volatility for gold and silver for sure, and the US dollar. Next Friday, we've got non-farm payrolls, again, another big announcement. As we continue into May, on the 26th of May, we have the OPEC meetings. There's a lot happening over the month of May, and then June, we've got the UK election, another FOMC meeting as well. So these sort of conditions definitely favor tradable opportunities on gold, silver, oil. So I'll move over to these markets. I'll share screens with you very shortly. Essentially, the way we capitalize on this via binary.com is trading either the higher or lower trade. Very simply, you can be in and out of the trade within a day, very straightforward. So you can be taking trades where you're essentially in a trade and out of the trade the same day. You can look at 1 hour trades, 30-minute trades, 5-hour trades, and all you need to get correct is, of course, the overall direction of the market during that duration. Get your amount of capital is all very transparent. You know how much is being risked on this trade. You know what your stake is. You know what your take profit is on that. You know what your payout is on the position. So you can see here, for example, for a 5-hour trade, the payout on that, this is gold here, would be £5,000. The deposit on that trade is £2,843.26. The purchase on that equates to a return of 75.9% on your deposit there for a payout of 5,000. If you're looking for the price to be lower, for example, on a 5,000 payout, the stake is £2,853 at 1 pence, and the return is 75.3%. What I like about binary, it's all transparent. You know what you're risking, you know what your upfront risk is on the trade. All you need to do is get correct the direction within a specified time, and you need to just then therefore get your entry right, the timing of your entry, and you don't need a stop loss, you don't need a take profit. You can be in and out of trades relatively quickly and just capitalize on the current volatility in the markets. Okay, so with that, I'll move over to the charts. There's a lot happening right now. I hope some of you have caught already some moves off the back of these GDP numbers which have just come out. So let me bring this out to you so you can see what's going on. Hopefully the screen share will be okay, so you can still hear me okay. So hold on whilst I do this. Okay, super. I think that's okay, guys. You can probably see gold at the moment. Oil is really getting a move on now. Okay, let me just show you oil. Oil is, you can see oil, perfect. Thank you, Sharice. Okay, so best way to view this right now, US dollar. Okay, so the US dollar, go lower time frame here. US dollar, the GDP numbers have just come out, stronger than expected. This is US dollar 1 hour chart, popped up off major support here. We found support at the monthly pivot. On the daily chart, you're getting a nice bit of support there. You can see here we're getting a hammer forming. It's really been consolidating just around the 200-day moving average. You've got major trend channels which are providing support for the US dollar at the moment. Off the back of those GDP numbers, it's getting bid up at the moment. If this continues to rally today, if we get additional strength in the US dollar, then I would expect the potential for a continuation here higher and put pressure on both gold and silver. There's an inverse correlation between the US dollar, excuse me, and also gold and silver. Now, off the back of the open on Sunday, actually, before I do that, let me talk about oil, because oil is really starting to get a move on. So oil has been very interesting over the course of this week. Over the last week and a half, actually, we saw a breakdown after a retest of major overhead resistance here. We got into a short-term overbought condition, rolled over last week. Wednesday, we saw a breakdown in price, very quick move here, came all the way back down towards the lower end of this trend channel, retested the 200-day moving average. Now, what I find very interesting about oil at the moment is how well it is supporting the lower end of this major channel here on oil. So if I just take it out and just show you a raw chart here, you'll see what I mean. And you can bring this on your chart very easily. Just put it onto the daily chart. I'll just quickly bring together a chart just to show you that. Bar up, bar down. Hold on. We'll just make this very clear for you to have a look at. Okay, right. So you can see very clearly traders have essentially come back in at a major underlying level of support. So you just hook up the lows from April 2006, go right, the lows from July 2016, sorry, April 2016, excuse me, July 2016, October 2016, bring it up to the lows from March 2017. Here we go, and there you can see pop right off that level of support. Also, what we'll add on to there is just a 200-day moving average, because we've spent very little time on oil in 2017 below the 200-day moving average. This is quite an interesting point here at the moment. So I'll just add that to you just so you can see this on the chart. And you can see very clearly on the pops where we've broken below the 200 MA on oil, it spent very little time below that before it's considerably ramped up again. We've seen that a number of times throughout the last year. So for me here, right now is a good opportunity to get involved in oil. We're long already of this market, but you can see found support where it needed to find support. It's getting bid up at the moment, rejection counter on the daily chart, good follow through so far. It's done what it needed to do in as much as it's broken above the previous day's high. We're starting to see some good follow through. It found support at the lower end of this major zone. So I'm looking for some follow through here, either shorter term time frame, getting in and out of the trade on a quicker basis over 1, 2, 3, 4, 5 hours, or just holding this for a trade. Ideally, I'm looking just to be short term in terms of binary, in and out the same day. Yeah, that's the play really I'm looking for, just to be in and out the same day at the moment on oil. And then we'll look to reassess, re-enter next week as well. So at the moment, this is getting nicely supported. This is a raw chart. I'll bring it back with all my indicators on at the moment. We're essentially popping above yesterday's high. Nice level of support here for UK oil. I'm looking at more upside short term here. We've also got the OPEC meeting, which is occurring on Friday, the 26th of May in Vienna. So what I'm looking for, what's quite common prior to these OPEC meetings, this occurred over the months of August and September, and also in the lead up to the November OPEC meeting as well, is these consolidation of price where you get essentially higher lows, lower highs, and you build into a pennant formation. I would not be too surprised to see oil continue to follow through and then start to move within a tight range in anticipation of the OPEC meeting, which is occurring towards the end of May. So a potential rally, just staying within a consolidation zone. Again, on the raw chart, all oil is really doing here is moving between support and resistance. So it is moving between key support, key resistance. You've got higher lows, lower highs on the chart at the moment. And I would expect the overall range to get tighter in the lead up, as there's going to be more anticipation for this OPEC meeting as we go into May. So the potential for a retracement higher and then a continuation into the OPEX as we get closer and closer to the May meeting, which is approximately a month away. And then I'll be looking for some sort of resolution of that meeting, either a breakout higher or a breakout lower. I mean, that's quite the forecast at the moment. That would mean that we're going to essentially continue to consolidate within this range, but we'll see. We'll see whether that plays out over the next month. But that's what I'm anticipating at the moment for oil. And I do think short term, we've got a good opportunity here to take advantage of momentum to the upside. It found support where it needed to at the moment for oil. Now, also, I put on your radar silver, which is breaking down. It has been breaking down over the last week and a half since it topped out here going back towards the end of March, beginning of April. And we saw this on geopolitical risk. We saw a significant move to the upside, but that was short-lived. And then we've continued to see a breakdown in price over the last week and a half. Both gold and silver gap down on the open. What was here's the hammer forming on the US dollar. If we go over to gold versus the euro, this was quite a considerable decline. So off the open, gold versus the euro had this huge gap down in price, much larger than gold versus the US dollar. So the gap down was about 300 points. So that was quite considerable. Hasn't filled the gap, by the way, either. So we've continued to see a decline on gold versus the euro, which does tend to lead gold versus the US dollar. Now, if we have a look at the US dollar index, if that gains strength today, if gold euro continues to struggle where it is at the moment, and if it breaks down, breaks back below the 200-day moving average, and we see a further decline in price, therefore, I would then expect gold priced in US dollars to take out support. Now, it has been ricocheting off the 1260 zone all week. It has found support at that level. Whether we can get a resolution today, we'll be watching it closely. On lower time frames, let's take it down to the 30-minute. You can see we've had a bit of a whipsaw in price. In fact, we go over to the daily chart, and we've just seen a breakdown off the back of the GDP numbers. So it's still getting a lot of support around this level, around the 1263 zone. It's getting bid back up at the moment. Gold hasn't really fully broken down, but it is vulnerable. If it breaks below support today, particularly if it takes out 1260, $1,260 US dollars per ounce, it definitely opens up the door here for a further decline back towards 1250 and possibly even 1240. And then what I would look to do is reposition as we go into next Wednesday's FOMC statement, just getting ready for a good trading opportunity off the back of that, and also Friday's non-farm payroll next week. And then, of course, again, just getting ready for the French election results, the second round. So I would say the best way at the moment to position yourself on gold, silver, on a lot of these markets is short term, in and out within a day, ideally, just banking your profits where they're being made available, coming back into the markets, taking advantage next week of the FOMC statement, Friday, the non-farm payrolls, then Sunday, the French election results. There's lots happening in the next couple of weeks here, a lot of trading opportunities that you can take advantage of. And so I'm looking for short-term plays here. Also, the S&P 500. I mean, what's been noteworthy this week is the S&P 500. We've got earnings still coming out this week. We've had a little bit of volatility after the tax reforms were announced by Trump on Wednesday. Overall, we saw a little bit of a decline in prices. Initially anyway, the long-awaited tax plan failed to inspire investors, and we saw some selling off into the close, but that's not really followed through for the S&P. It's continued to hold on to the gains here. You can see it's right at the very close actually to the all-time highs. It's about 10 points away at the moment. It would only take a surge higher, a breakout above 2,400 for it to break above the all-time highs. And already we've seen additional moves here so far this week, particularly on the NASDAQ breaking out to all-time highs. It's very close again today to breaching above those levels. So I would pay attention to that, particularly if you do trade these markets, if you do trade the equities as well. If it does break above 2,400, I would expect a further decline in gold, silver, and we'd see more capital flowing into equities. So I'm watching the correlations very carefully. I think short term right now, there's some good opportunities on oil to capitalize on this momentum to the upside. Gold, I'm watching to see if it can break below 1260 today. If it breaks below that level, I suspect we're going to see a lot of stops get taken out, because we've been sitting around that 1260 zone throughout the whole of this week, but it's not looking that encouraging at the moment off the back of dollar strength right now. If that continues to build up momentum today, the dollar, particularly if it closes and gets above the 200-day moving average, you can see a hammer building here on the daily chart. On the 1 hour, it's a nice pop to the upside. So if the US dollar can continue this momentum higher, I would then look for a decline in gold, decline in silver. And in fact, silver is the weaker out of the metals right now. So if we move over and have a look at silver, silver overall has been pulling back further. If you look at the gold to silver ratio, it tends to favor more downside in silver right now as opposed to gold. Gold is more favored than silver. So if you're looking to take advantage of weakness, particularly on binary, you might want to look at silver versus gold at the moment, particularly if it breaks below yesterday's low. We could start to see another further corrected pullback back towards $17 per ounce. So I would watch that very carefully at the moment if you're looking short-term trades, potential take advantage of weakness here. And then what I'm looking at would be, as we go into the FOMC statement next week, non-farm payrolls, the US election, the potential to reverse position here, and look at buying silver at areas of value. Only on confirmation though. If it keeps breaking down and if it breaks below the swing low on the left of the chart here, I would be a bit concerned that silver could have a further a larger decline here back towards possibly even going as low as around $16.50 per ounce here. At the moment, it's back towards a 50% level, so where it started the year up to the highs, it's coming in for a corrected move back towards $17 per ounce. That could be a support zone, or it will overshoot to the next level of support at the 61.8 Fibonacci level, find support there and potentially bounce back. But watching this market quite carefully at the moment as well for trading opportunities. So we'll also, so with that said, guys, I'll just move it back over to gold as well. I would keep a good eye on these opportunities as they progress throughout today. If you'd like more of this analysis and you want to be kept updated on the exact trades that we take at the Gold and Silver Club, you want to join our live trading rooms during the week, you also want access to our membership site, all of our resources there as well, you can very simply do so by going over to www.jointhegoldandsilverclub.com. If you complete the application form there, we'll get in touch with you ASAP regarding membership there. So again, if you enjoyed today's analysis and you would like this on a more regular basis, you'd like to be kept updated on all of our trades, it's just www.jointhegoldandsilverclub.com. As a member of the Gold and Silver Club, you get access to our trading strategies, our online training course, exclusive weekly live trading room webinars, a recording of every single session as well. You also get access to our live trade recommendations ready to implement. You get exact details of where to enter, exit, place a stop loss on each trade, the inside track, a week ahead trading plan, and a watch list for the week ahead. And of course, access to our Private Traders Academy members website. Okay, so you get all of that by being a member of the Gold and Silver Club. So with that, guys, as always, I wish you a profitable day, good trading. I hope you can capitalize on some of the opportunities in the markets at the moment. And if you want to join us next week to trade the FOMC statement, non-farm payrolls, and also the French elections, we'll be providing our traders with the trades that we're executing on that. Again, feel free to join us at the Gold and Silver Club. Okay, so with that, guys, have a fantastic weekend. Good trading. We'll speak to you real soon. And thanks again to Binary Street and the team for putting on today's session. And we'll catch you on the next one. Thanks, guys. Take care. Have a great weekend. All the best. Bye-bye.